Hey Josh, what's going on? So I thought about this and I said, let me go ahead and switch this up to the way he do things as far as the way you look at the candles. So this is a 5 minute chart and I want to explain how we look at the market, with ICT, and just the whole point of this video is the market structure. Because I think the guy you learned from, I don't know if he was teaching market structure, but I just want to show you. I want to show you why I got in for a buy. Now, this is yesterday. We used the Asian range with ICT. The way we break the day up, we use the Asian ranges from 2000 military time. I guess it's 8 p.m. all the way to midnight. So this is the Asian range. Okay, just want to mark it up. And I don't look at the candles this way. I'm just doing it because I know you look at it when I shoot the breakdowns the way with the market. I'm going to do it the way that you see it. Just change the candles to blue. I think yours was blue. So this is the Asian range. Now, to be honest with you, I think well, obviously I looked at the market the wrong way. I was looking for price to come down into this area here for a buy. I was looking for a buy. So when we look at the structure here, price was streaming down, right? I think I was showing this in the last video. When this low right here was taken, the market is still bearish unless price can close above the highest up close candle here. I guess doing it this way is important to see what candle is what, because sometimes this could be a bearish candle and we need to see what candle is actually green. So then I could turn on Hakanashi real quick. Not Hakanashi, hollow candles. And it'll tell me that this candle here is the highest up close candle. You see what I'm saying? This is important when looking at the structure, even though I understand why you look at all the candles as being blue or one color. But I would have thought this is the highest up close candle if I didn't have this on. But you can always switch back. So the market's still bearish. This low right here was taken. The highest up close candle becomes important. You can keep your colors on, but if you want to look at the structure, then we have to make sure that this candle is bullish because we have the close is important. But we can go back to all one color. So it's still bearish. Actually, I shot a video early. I'm glad I reshot the video and did it with your colors on it. You see, so once this low was taken, the highest up close candle, the market's still bearish unless it can come up and close above here. It can wick above it. It can come all the way up here, whatever we want to see it close above it, preferably on a higher time frame, but we're on a 5 minute. So just come here, turn on the hollow candles, make sure, and then we can turn your candles back on the way you do it, which is smart. I didn't see other traders, high level traders, keep them all one color as well. So that this is a good idea. Okay, so market moving. Boom. We had this low taken here. When this low was taken, the highest up close candle becomes important. Now, if they're all one color, then we don't know. This I'm just teaching you, not teaching you, but because I don't know what you've been taught. But this is the market structure. This is not a proprietary strategy or anything. This is just how the shit works. So when this low was taken, the highest up close candle becomes important because it's still bearish. Because remember, I was waiting on price to come down to a target down here. Remember, I was looking for price to come down here based on my analysis, but I was wrong. So I had to follow what the structure is saying. You see, because I could have been like, oh, F that. Price definitely got to come down here. I'm right. And the structure is not showing that it's going lower. It's showing that it broke structure here because let's turn your candles back on. When this low was taken here, the highest up close candle becomes important. So as price continues to go, boom, right there. When this candle was taken, the structure is now bullish. So the hell with me thinking price gonna come down here. That's not happening. That's why I was making mistakes before. It's like what me and you were saying. You's like, we got it. Do you want to be right or do you want to get paid? Because I was like, it has to come down there. But now we turn back on the hollow candles. This candle is bullish, so it verifies that it came above here. This is a break of structure. So then, based on the way we're taught with ICT, is we have to ask ourselves, why did it break and where is it coming up to? So we have to look at the recent. We have to look at the recent structure that created all of this, that created this big push. Where's the consolidation at that created that push? And that's from here to here. the build up in here, the build up in this area here created the push we just saw, right? This huge push down, this consolidation area created it. So according to ICT and the way that we were taught, we have to ask ourselves, well, this is where the one candle colored thing not going to work. The way, the ICT, the way you've been taught as far as learning the structure. So we have to look at the highest peak here, and then we have to look at the structure point. What I see is something called a bearish mitigation block. Okay. Basically, we have to look at the high, and then we look at the lowest down close candle before the high was taken, and we have to mark up the whole block. Okay. This is a bearish mitigation block. Basically, this red candle here, this is where the colors, looking at the colors, wall one color is not going to work doing it this way, but you can always switch back and forth, right? Like if I want to look at it, I'm not telling you that's what you would do because you do it your way and your way is working. I'm just showing the structure, uh, the way we've been taught, if this has any value. So I'm going to mark up this whole candle, right? Because when we seen this breakdown here, let me go back to your colors. Remember, it broke structure for a reason. So when this low was taken, this highest up close candle became important. Then when we seen this huge push here, which is verified as a green candle, so it closed above the highest up close candle. Now we're bullish. So then we got to go back to your colors. Now we got to ask ourselves, where's it coming up to? This is why ICT becomes important because I know people like say certain things about ICT, man, but I mean, the dude is really gifted with what he knows. So this is called a bearish breaker. This is a blend right here. We have the bearish breaker is basically, this is the high right here. When this high was taken, you see that? We have to look down and see what was the lowest down close candle, and that becomes a bearish breaker. The mitigation block is when a high is taken. We have to look down and look at that candle as well. So this is a blend right here. So basically, when this breaker structure happened down here, this is where I would see price coming up into. When this happened right here and it closed above here, we have to ask ourselves, why? Where is it going? And so instead of looking to buy in this area here that I told you that I was looking for price to come down into, I said if I see a breaker structure, I'm going to buy after the retrace. Meaning that every time it breaks structure, let's go back to your candles. Every time it breaks structure, like it did here, it closed above, we look at the bodies versus the wicks. When it breaks structure, it's going to come back down to retrace. It's going to come back down into the high that was there before the break. So you see how it came back down. So I was a buyer here. Put a green line out in the video. I was a buyer here. And remember, we got to ask ourselves, where is it going? So when I was a buyer here, stop loss. Sorry. Stop loss was below this swing right here. I thought I was going to get stopped out, to be honest. I always use stop loss for the orange, like a solid orange line. There's a stop right there. Now, my target, based on this structure, man, my target was a blend of these two because let me turn the red candles down and find the actual bearish breaker based on the 5 minute. On the 15 minute or the 30 minute, it'll be different. I have to find the lowest down close candle and mark up the whole body. You see, this is actual breaker here because it's the lowest down close candle based on bodies. This is where people in the ICT community, we talk about body game versus wick game. You see, because this is the lowest down close candle, so this is the bearish breaker. So looking at that and this wick right here that happened, let me turn this a little. Let me turn your colors back on so you can sort of see it a little bit better the way you see the market. My target was here, a blend of these two areas. So I put my target right here. I said price would probably come up to here. my two targets was here because I put on two positions. I should have held for like, I'm kind of like, I'll be getting spooked sometimes. So let me just put these small lines as my two targets. And then I'm going to put the bigger line where I probably should have held to. I think I should have held to somewhere up here, but the smaller lines is my actual exits. Okay. So this is based on the structure because remember we had a break of structure here when it closed above here. So you have to ask yourself, where is it going? It didn't break structure for nothing. It's coming up to retest the lows. These lows here, it's coming up to retest the lows that were broken. These lows were broken, all of them, and they wasn't retested yet going up. So let's go ahead and keep pulling to the right with your candle, with the color that you have on here, the color that you see the market with. And if I send any videos, I'll make sure to keep the colors the way you do it because it make more sense. Because I shot a video earlier, then I had a phone call come in, and I was like, you know what? Let's do it the way he do the colors so it can make more sense. So I'm buying. Okay, remember my stop is down here. Hasn't been hit yet. Now, this is the wrong thing to do. I know you're going to be like, you shouldn't have did that, but I did move my stop down a little bit once I seen this happen. So we still holding a buy. We got two buy positions on. We're going to get out here and here, but I probably really should have held to up here based on what I'm seeing, but I'd like to get out early. We're in the ICT Asia range right now, that orange box. What I want to do, man, and maybe you can give me a tip on this or something. I want to really start buying in retracements. So these retracements here, I should have been buying. I knew it had to come up here. This is where the confidence comes in at. Because if I knew it was going to come up here, but how strong do you know? Because I should have been buying right here. I should have put on extra positions in these retracements because I believe price was coming up to here based on the structure, right? Now let me zoom in and explain this real quick. Why was I holding? Was I gambling or do I understand the structure? Now we got to turn. See, this is, the one color thing. It do make sense, man. But I mean, to understand, if you understand the structure, you have to look at the candles. Um, so let me just explain this real quick and then I'll go back to the colors. But like I said, all one color do make sense because I know people who do it that way, and so it is a good way to do it in my opinion. But I think people should be going back and forth, have one solid color, but you have to understand what kind of candle is the bullish candle close and the bearish candle close and opens, like ICT said. He said, I don't need any indicators. The only indicator I need is the open, high, low, and close. I love that. So, all right. So the way this works, man, based on the structure, when this high was taken here, the lowest down closed candle becomes important. Okay. So it's the same thing when price is going up. I'm not saying you don't know this. I'm just telling you how I understand the structure. Okay. This is where looking at the candlesticks is important. If you trade in the structure to get in for a buy or sell or to see where the trend is, right? So this line right here, we're going to make yellow, meaning if price closed below this line, then the structure is bearish because once this high is taken, this is why I was holding. I wasn't just saying like, oh, it took, let me circle this. Let me put a box around here to show that this is a breaker structure, this candle here. Because there's a difference between a market structure shift and a breaker structure. I don't know if you know the terms, but y'all probably call it something else. That's what the retail traders call it, right? So what I'm saying is this is the actual breaker structure because remember when this low was taken, the highest up close candle, the green candle, this candle here, the structure is still bearish unless it can prove it can close above here. On the 5-minute chart, preferably on the 15-minute, 30-minute because it's a higher time frame. So we had this here. So I started looking up like, okay, well, where's the ICT structure at? Because that's where it's stopping at. And that's where ICT it becomes important. But like I was just saying, I wasn't just holding blindly. It had to follow the structure. Okay, because when this high was taken here by this candle here, let me turn your colors back on. when this high was taken here, the lowest down closed candle became important. So the structure still bullish unless it can prove it could close below here. When this high was taken, the lowest down closed candle becomes important. That's where looking at the colors is important, right? And then, so the structure is still bullish. When this high was taken, the lowest down closed candle became important. When this high was taken, the lowest down closed candle became important. So this is why I'm just explaining to you why I was holding, like, because you like to explain stuff in detail. I could do that as well, very thoroughly, especially when it comes to this kind of stuff, understanding the structure and holding these trades. So when this high was taken here, price is still bullish. Okay. Now I actually have to turn on the stuff now so you can see, because you use all one color. The structure is still bullish. Now remember, I'm holding for my target here. I'm holding for these ICT areas of structure. Okay, this is a bearish mitigation block. We got a bearish mitigation block. Or is that a bullish, or is that a bearish breaker? I think that's a bearish mitigation block. It's just terms that he used, man. It's really, some people just call it areas of structure. All right, so this is what I'm holding for, the blend of these two areas right here. And I really should hold for this purple target, but I was a little spooked, so I'm get out here and here with the two buys that I'm in down here. And I'm explaining why I was holding, so you won't, so you can see, like, the guy can explain the structure. I mean, not just holding because ICT says it's going to go up there. No, I'm looking at the structure to make sure it's not breaking, right? So when this high was taken, this is where, like I said, the colors become important. I can't look at just the blue colors. That's why I kept asking you questions about the structure, because I'm like, well, how can you see where the structure is going when the colors are one color? I mean, I don't know. That's what I was trying to understand. But when this high is taken here, the lowest down closed candle becomes important. So it's still bullish, and I'm still holding for my bullish target. When this high was taken here, the lowest down closed candle becomes important. If it can close below there, then now the structure is bearish. Now let's check this out. This is important right here. Now, this high was taken here and it closed below, right? It looked like it is a breaker structure. This, according to the rules and the way this stuff works, is true. But guess what? We still have not hit these ICT areas. We have not hit this mitigation block or this bearish breaker. So to me, I should have been buying as price was dropping, but I didn't, because this is a false breaker structure, even though it is a breaker structure technically. Because look, this high was taken. When this high was taken, and it created a swing low, three bar pattern, a pitchfork. It created a swing low, and the low was closed. It was closed below on the bodies. So I just held the drawdown, but I should have been buying as price was dropping, because I know that it has not came up into this area of structure yet. The bearish breaker, what we call a bearish breaker, ICT bearish breaker, or mitigation block. It has to come up here. Like, this is what people don't get with ICT. Like, this shit is real, because understanding what I just showed you would have had people holding. But if they looked at the structure itself, this is a valid break based on the way I understand this. You see, it did close below here. So people have been thinking like, oh, we about to, we're about to come on all the way down to here, because this is a bullish, what we call a bullish breaker. It's probably going to come down to here. But you see, it reversed. This is the power of ICT, man. I know people be talking, saying stuff, but I'm like, I'm very deep into it. Okay. So seeing this, I should have been buying this price was dropping, because I'm like, no, this is some kind of fake out, because it has to come up here. Like, so I don't know what all this is. Yes, it looked like a valid breaker structure, but that's not, it has to come up here. See? So then we see price switch gears, almost retouch the Asian range, switch gears and come up to where? came up to the target. So I missed my other target here. This is my second target. And you see, I was a little ambitious to hold. I said I was going to hold all the way up here, but it came up into this bearish breaker. Let me go down to the 1 minute chart. Let me see it a little more clearly. I mean, bearish mitigation block. This is what I'm talking about. This candle here. When this high, this is actually a bearish breaker. When this high was taken, right here, we have to look at the lowest down closed candle. This is on the 1 minute chart. So this is called a bearish breaker. Okay, the lowest down closed candle before the high is taken. This is what I'm saying. People want to joke on ICT, man, but so when price came down here, this I knew price was still bullish because it has not hit. It didn't come up to this area, and you see it. It literally stopped on a dime right at the bearish breaker in reverse. And so my second position that I had, I was holding for a price to come up here, but let me go back to the 5 minute. I was holding for price to come up to here. I was thinking like maybe it would go higher. You know, I thought it would hit maybe the blend of these two areas. And then when price actually closed below the wick low, I was like, man, I'm out. You know, I was like, if it goes back up, then I'll just feel stupid. But this was actually gambling because based on the structure, I should have been holding the buy until the structure told me it was bearish now. Because based on what I just was telling you, to be honest with you, the price is still bullish. The structure is still bullish unless it can close below this line. Unless it could close below this candle here. But see, I got out here. This is more of gambling and being scared and not thinking. Because think about it. It went above here. So now we have to look at the lowest down closed candle. That the structure is still bullish unless it can close below here. And I end up closing here, that second position. That's not trading. That's gambling. And I don't feel good about that. I should have held. Now you may be like, well, the hell, what you talking about? You should have just got out. I understand that, but we're talking about actually trading though, because based on actually trading, the structure was still bullish unless it closed below here, unless it proved it could do it, and it did it here. That's why I was telling you, if you actually trade in the structure of the market, and you have to be willing to give some of it back. So I should have actually sold my long here. I still would have made money because I got in here and I would have sold here, but I was being a chicken. I was like, man, I'm just going to close. Now, I'm not saying this isn't like the smartest thing to do because I would have, from here to here, that would have been extra money out the account that would have been lost. But I'm talking about trading versus the gambling thing because actually based on trading the structure and how it works, the structure is still bullish unless it can prove it can close below here. Because this is the high. This is the lowest down closed candle before the high was taken. All right, man. Hopefully that makes sense. Enjoy your day.